Welcome, guys. Welcome to the stream today. Just give me a minute and I'll send out the invites. Kieran will join us in a moment. So just bear with me. Okay, YouTube. There's the link. Should be the link out to Discord. Let's have a look. Louisa Townsend, how are we doing? Good afternoon. We all right? We'll just wait a couple of minutes for some people to get in here. And then, if anyone has a Darwin they want us to go over, then we can go over it. If not, then, we've got a few things that's pretty new today. If anyone's realized, the index, we've now reached we're almost at 50 million. Yeah. I'm all good, thanks. I'm all good. Just another day. Markets for me have been a bit so. Pretty flat for me today. But yeah, we'll see what it's like. But yeah. Okay, awesome. We have a Darwin to review today, which is always good. Let's see if I can find it for this one. YBN. Okay, awesome. So we do have at least a lot more of a track record than what most people put in. So yeah, this will be pretty good to kind of go through today. So thank you very much for putting that in. I see we are up 1.86% today, so that's really good. Congratulations on that. But yeah, okay. Let's start. Let's go through it now. Okay, so we've been trading since April last year. So we're probably got ourselves, sorry, not April last year, April 2 years ago. So that's 2-year track record. So we'll have some good stats to go through. 15% return with 8%, 8.73% drawdown. Nothing crazy. It's in like the loss, the drawdown. That's totally fine. We had a good start, obviously, to 2024, which pretty good. And 2025, yeah. The thing is, right, a minus 2.36% losing year is nothing to be, it's part of trading. It's not exactly anything bad. We can see that we're making that good recovery this year already. So some people are always put off by having a negative year. But one thing that investors like to see is if someone went through a drawdown, can they come out of it? And can they, go to new equity highs, which is basically what is it? Wait, new highs? Yeah. So you've made new equity highs after a sort of losing year, which is brilliant. It shows that you're quite active as in your approach. Maybe you changed a few things. Yeah, a few tweaks for 2025. Yeah, exactly. You've learned a lot, and we're now progressing, and the Darwin's making new equity highs. So it'll be really good to see how the rest of your year goes. If we can finish again over 10% in 2020, same as we did in 2024. Things can be shaping up to look pretty good. Let's have a look at your sort of drawdown. Yeah, so drawdown, again, for me, that looks pretty healthy. There's no crazy like down days as such, but you can see that some of the big days that you have are recovering that drawdown. So that's pretty good to see. What I don't like to see is just like a straight one day where you've lost like 5-10% of your account, and we can see the consistency in your losing days. 1.65% is your max losing day. That's very well. That's very good in handling the risk, and obviously your best days are well outperforming your worst days, which is always good to see. Weeks can be quite different, and months. Again, nothing's crazy in the double digits figures. All single figures, which is pretty good from a risk perspective. I don't have a problem with that. Everyone has a losing month, or I think that they do, from what I've seen. That was me 3 years ago. Mindset more solid now. Yeah, I think the good thing is, right, when you go in a drawdown, you learn a lot more about yourself, but also a lot more about trading, and it really does build resilience. And you come back stronger, and you accept that drawdowns can happen. So it's pretty good that you've went through a drawdown, because now especially that when you had a losing year as such. Some people think that it's not going to happen, but it can. And it's a tough time. And the good thing is you never gave up. You obviously tweaked things, adjusted things. Now we're at equity highs, which is always good. You're always going to come back stronger as a trader if these are the things that you're doing. So, hats off to you. That's always great. If we look at the assets that you're trading as well, let's have a look. So, 27 different assets in Forex, 3 in commodities, 7 in indices. So, pretty good split overall. Obviously, we're more heavy in Forex than everything else, which I'm probably more Forex as well, which is nothing wrong with it, but it's looking like you've got a really good split between everything. So yeah, interesting. It's almost like a perfect split between all of these assets. So it's clear that you're not like the most like 361 trade. How many trades is it in total? Sorry, let me have a quick look. 403 trades over 2 years, so that's 200 trades a year. So yeah, almost one a day, you would say, probably. So that's my guess is that you're a manual trader. Would that be correct to say? Because I would think that with there's nothing wrong like with the manual. Exactly. I did. Just from the amount of trades, I could tell it's manual, it means that you're actually quite active. So I'm guessing you have a trade most days. Like some days you'll have days where you're not got anything, but other days you'll be more active than others, which is fine. But again, everything's looking not too bad from a return 7% from your 361 trades, with a pretty decent win rate. So I'm guessing you go for positive risk reward for the most part, and commodities making 8.44%, 26 trades, pretty good. Trying to find swings, that's perfectly fine. There is nothing wrong with that. I think it's a really good way. It's how I started trading as well. Like I don't mind swing trading. I think it's good. It allows you to pick your entries a little bit better, I would say, rather than just pure having to go through quick intraday trading. So I don't have a problem with that. And we can see that it's clear that you're more active in America and European session. My guess is the Asia session is when you're at the start of the day, if you're depending on where you are in the world. So you're going to have less trades in Asia than you are the other two because you're manual. And I'm guessing that you'll be around these sort of time areas. So that's cool. What's interesting to see is most of your returns are coming from your European session. Yeah, so UK. So that I was going to say, because the Asia session, you'll probably be picking up a few trades just as it closes, maybe as you're getting up early. And European session definitely where the strategy is quite strong. Like we've got less trades, obviously, in the American session. It's pretty flat. So it's clear that focusing on that European session has been working very well. Single days, again, it's looking like a pretty good split. Wednesday's only down 1.77, so there's nothing to be too worried about in terms of singular days as such. Like if this was obvious that like you're down like 8% and everything else is like up, then I would say maybe have a look at your backtesting history, see if there's any sort of singular day that's underperforming. But for me, this just looks like a normal split. Like Mondays are pretty strong days for a lot of strategies because we've obviously got the volatility coming in from the weekend. So normally, depending on what sort of strategy you're using, even a swing strategy, we can get momentum from Monday that then hits take profits. And Wednesday, middle of the week, it can sometimes be a little bit less volatile. But again, it's maybe where some of your trades are actually hitting stop loss. So it's hard to say. Like I can't really say look at your individual days of the week because it's a good split. Nothing is obvious. So I just keep what you're doing, and you don't need to change too much. If we actually want to kind of have a look at the assets that you're trading and everything else. So indices we're trading. Okay, so it has to go through this. Yeah, of course. Oil, 9 trades. Yeah, pretty good. Good return from oil. So I'm guessing this year you've been trading oil as it's going up because you're seeing the momentum, which is good. Same with gold. I would probably say that you've only just started really recently trading gold because there's more momentum, which is not a bad thing. Like for me, you don't need to have any sort of like how would I say it? No oil this year. Oh, okay. So no oil this year. Interesting. Too whippy. Yeah, no, that's fair. That's fair. Um, I mean, I've found oil quite hard to trade over the past 2 years personally, because especially like as we went into yen pairs, yen pairs have been pretty good. That's it's a good market to trade. But yeah, if people caught, fair play if anyone caught like the big oil run so far this year. The problem with oil that I find is even from a swing trading perspective, with it being so volatile. I'm not a person that wants open risk over the weekend too much, depending on what sort of where we are in the world. How tense is it? So again, oil's been one of those ones that's been gapping pretty big. So you can either be very lucky, get a big return, feel good, or you've got the flip side of that, and it's quite hard, and you get a bad loss. Oil and gold, I'm still studying. Yeah, I would recommend gold. Like gold is a really good asset to trade, and it has been for many years. And all the data that I've got going further back to even 2003, oil is just a really good asset to trade. But obviously, it depends on what your trading strategy is as well, or what your style is. But yeah, no problems with gold, oil. I've got a love-hate relationship with it, and I'm pretty sure some people do as well. So yeah, silver can be nice. I mean, silver kind of like follows gold to the most part. Like it's not 100% correlated, but depending in times of where like times are a bit crazy, we do start to see a more like positive correlation to the almost the power of one. But sometimes it isn't, but it's interesting. Okay, now let's have a look at strategy statistics here. So, win rate of 54%, which is fine. Long exposure of 54%, that's pretty good as well. So it means that you're trading kind of both sides of the market rather than just being exposed to, say, long only or short only. I think that's pretty good. It means that you're exposing yourselves to short trading and long trading. Nothing wrong with that. Yeah, we can definitely tell that you're holding your winners a lot longer than your losers naturally, just by the time duration ratio. So 2.57, which is good. I mean, to be fair, I'm never too crazy on the time duration ratio because everyone has their own individual style. People like to have a negative risk reward. Some people like a positive risk reward. I'm on the same end as you. I like a positive risk reward, and hold my winners longer than my losers. But there is no right or wrong about it, in my opinion, because there are some very successful Darwins out there. They hold their losers longer than their winners, but that's just because they're got a negative risk reward, there's no problems with that as well. There is no problems with that. You trade. I'm always like, you trade how you want to trade. If you're making a return and it's right, don't let anyone else say that it's wrong, because if it's working for you, it's working. So yeah. VAR, another important thing. So, one thing that I do like to see, and this is basically where we're speaking about, you're like what's quite clear is your risk control, and this kind of mimics that and shows you that you're not changing your risk much at all, or it's the risk is just in the volatility of the assets that you're trading, not your actual risk management yourself. So this is as flat can be for the most part, because the only way you can get this flat is if you use like fixed lots, I believe, where obviously different position sizing will be for different assets because you're trading a multitude of different assets. And yeah, we can see that the risk is very linear, which is really good, really good. So to be honest, I don't really have any sort of recommendations apart from keep doing what you're doing. As you say, you've made tweaks to 2025. You've learned some lessons in 2025 naturally, and now this year we're starting off strong and we're making all-time highs, and hopefully we can see your Darwin progress and we go further with it, which would be great to see. So I would definitely recommend come back in say 6 months, 9 months, a year's time, and let's review again. Let's see how you've done by the end of the year. That'd be a really cool thing to do, and I think lots of people can take inspiration from it as well. So yeah, thank you for putting your Darwin forward. We do normally get quite a few, but not as many these days, because I think we've reviewed quite a lot. So thank you for that. Does anyone else want? There's a little. We'll go over a little review of anyone else's, or if there's any Darwin specifically you want me to kind of go over that are not your own, that's totally fine as well. We can dig deeper into some of those. But yeah, for anyone that's not joined the stream, today until just recently, the index has now hit like all-time highs. We've now just got below the $48 million mark, and hopefully we can progress higher. But if anyone here is growing their capital within Darwinex and everything like that, we're going to try and get investment, right? It's very important that you maybe watch yesterday's stream with Kieran, because we touch on capacity. So one thing that's evident right now is, as we're getting more investment into traders, some traders' capacity is now starting to hit a little bit of a wall. What I mean by that is the more money that's flowing into these Darwins, the more slippage that's going to happen, the more the internet execution of orders, the prices that we're getting at is going to start slipped, meaning that we actually get a negative side of performance for some of these Darwins now. So it's very important that, as you scale as a trader, we're then finding ways that we can scale as well from a capacity way. So yesterday's stream, Kieran goes through the document. It's a lot of information, but it is well worth going through it, because there's a lot of good things that you can learn from there. Now, just a few things we'll touch on until someone puts another Darwin in or has any suggestions for a Darwin to go over. One thing that we've started implementing is splitting orders. Now, what I mean by that is, let's say we're getting in a position and it's like 0.3 lots, not 0.3, yeah, 0.3 lots. What we're looking at doing what I'm looking at doing with one of my systems is splitting that into 3 positions at 0.1 lots each. So it's still got the same overall risk, but putting a little bit of a time delay on each of those positions by like 5 seconds, 3 seconds, 5 seconds, something like that. And same with the exits as well. So it means that we're not always trying to push full volume in at one time. We're splitting the orders up into different times where the order book might be able to fill them all 100%. But what I would say is, like, some of the strategies that I've tried it on, performance is worse, and there's no getting around it. The performance is worse, but it might be only by like 0.1% per year on some of my strategies, or 0.2% per year. So even if I do that with all my strategies, yes, I'll be losing performance, but what I will be doing is being able to make sure I can increase capacity. So instead of potentially saying I can only manage 10, 20 million, I can now manage 60, 70, 80 million. So, at the end of the day, in terms of returns, yes, it might hinder it a little bit, but it means that we can manage more capital. And, that is what every trader should be aspiring to do, manage as much capital as possible within capacity constraints and reasons like that. So definitely worthwhile watching. Cannot stress enough how some of these things are just so important as you scale as a trader. So yeah. Oh, I didn't realize ERQ has now overtaken SYO. So that's cool to see. And yeah, I mean, one of the things as well is, like, people think that you need to get crazy results year in, year out. You don't. You just need consistent results. I think, like, if we look at ERQ, for example, right? He or she has been around since 2014. And, we can see that there's some years in there that are like, for instance, 2024 here, 3.52%. It's nothing like massive. It's nothing crazy, but it's a positive result. But what we're seeing is consistency across the board. So it goes to show you that, we will have tortoise in the hair. I totally agree. Yeah, exactly. But yeah, what it does show is just consistency is key when you're growing. What these investors are seeing is this person, like, is not shooting for like the biggest returns, but what is showing is consistent approach, consistent risk management. And yeah, there is going to be a couple of bad months in there. For instance, in 2022, minus 5.68% for that specific month. But if we look on average, we can see that a lot of the singular months are not that high. Like there is the odd one there, here, and here, but for the most part, it's quite low, which is good to see. And you know, as we can watch, like over the years, like obviously early DarwinX days, there was less sort of investor capital available, and definitely over the past 2-3 years, it's really ramped up, and we're hoping to continue to grow, because then this means that traders, like for instance ERQ, can keep scaling, can keep growing. You know, if we look back to just at the start of last year, they had 2.3 million. Now they're up at 16. So massive jump in AUM, which is why, you know, that's just 2 years, not even 2 years, it's what, a year and a couple of months. And it's exactly why we need certain traders to increase their capacity, because if you look at how quick this happens, you know, you could think that you're okay, and then boom, you've got all this investment, and then you're struggling to push position sizing and things like that because of capacity. So very worthwhile looking into. But yeah, it just goes to show you that, like, you know, you don't need crazy good returns. You just need to be consistent, and then eventually over the years you get a track record like this. So great years like last year, crazy good, probably the best return since 2017, which is cool to see. But before that, we had years of what you would say is underperformance in the S&P. But you know, at the end of the day, you don't always need to beat the S&P. If you're controlling risk better than what an ETF would, then that's investable for a lot of people as well. So yeah, I think it's quite important that we cover things like that. So in terms of worst days, yeah, there's some quite big losing days for this Darwin, but overall, solid track record, very solid track record. A lot of trades, long exposure. So that's interesting. This is one of the people that I've actually seen for the first time that has not got a positive long exposure. So normally, because I mean, to be fair, a lot of the Darwins are a lot younger now, like 2, 3, 4 years, you know, even ones that are less than 1 year. We are seeing like heavy long only, not long only, but a long bias. And that's because naturally gold indices were trading alongside. So that's really refreshing to kind of see a negative long exposure, because even if I don't even know what mines is now. If we go to mine, yeah, even myself, I've got a 70% long exposure, so it's quite high to the long side. So yeah, it's quite refreshing to see, you know, that exposure be into the short side. Yeah. Does anyone have a Darwin to review? Or, you know, I don't really have too much to kind of go over as such, unless anyone wants to go over anything or wants an answer or question answered or something like that. Just a quick go through some of the Darwin, see if there's anything interesting. We'll see how people are doing in DarwinIA. Yeah, well, how many people are in gold nowadays? 670. Wow. Yeah, I'll be interested to see how quick it will be to get to 1,000 people in the gold, because that is increasing pretty quickly. I always remember when I reached it, was it early last year? There was only like 220, 230. So it's good to see that like a lot more track records are growing, are, you know, passing the sort of entry criteria to get into gold and really thriving. So it's good to see that we're now getting more people in gold. Yes, it's making it a lot more competitive for allocations. For example, like, where does this now go to? All right, okay, so it's increased a little bit. It's not too bad. 140, so yeah, okay. top 20 odd percent. Not too bad. Let's have a look at this one just for a quick look. Okay, that's interesting. That is a very interesting Darwin, actually. I've never seen one that's like doesn't trade for. Does that not trade for months and then just takes big trades? It does. Wow, that is super interesting. Let's have a look at what they're trading. Okay. 100% long exposure, 92.5% win rate. That is crazy. Winning position, 24 days, 10 hours. Losing position, 39 days, 50 hours. That has got to be some of the longest losing and winning exposure I have ever seen. Yeah, that's wild. So the VAR is like started off like decently and then it's got so low. I've never seen anything like this. I mean, to be fair, like it's so far this year they're doing great. Last year was okay, yeah, 3.97, but the year before 13.89, for that 22.58 and 9%. That's super interesting. Please review RDQI. No problem. Okay. So yeah, I mean, I do think there will be specific Darwins that are got reasonably lucky by just basically long only in gold and some oil as well. But there will be others that are just like, for instance, like I was heavy trading gold over the past 2 years, and it was a no-brainer because naturally it was going up. So we want to have that long bias that attach trading strategies to it as well. So, but yeah, I think when as gold sort of will go through its next phase of sort of stagnation, because it will at some point. Like everything, nothing just goes up or down in straight lines. There will come a point where gold becomes a little bit less volatile. It'll move, but just not as much as what it did. So people might not be able to completely just long only 10 positions and hope for the best because gold was going up. So I think as we get into more stability, and we start seeing a little bit less volatility, the ATRs averagely over the past 20, 30, 40, 50 days start going down. With less volatility, less people will be able to just gunsling sort of gold as some of them might have done. But yeah, it'll be interesting to see where some of these really high return gold traders are in like a year, 2 years time. Like fair play if they're still making equity highs, have no problems around that. That's what trading's about, making a return at the end of the day. If the methodology works for you and you keep making return, who am I to say that's risky or that's how to describe that's wrong. I don't think there is a wrong way. Anyway, okay, RDQI. So there's not too much I can base things off of because we don't have massive amounts of data. But what we can see is so far the return's pretty good. 5% drawdown to 6.88% return. So really promising start in 2026. I would say has been a tough sort of year so far for a lot of traders, and the index is sort of a result of whatever their index is returning per month. That's a reflection on how some of the best traders in Darwinex are doing as well, or the overall community is. And so far it's been a pretty where most people are slightly up or slightly down, but it's not been the easiest year to trade so far for a certain group of traders. But what we can see is so far 6.88% up. Great start to the year, great return. So well done on that. In terms of returns, annualized returns 52. Again, like this will change because there's not too much data to go off. We've probably got just slightly less than 3 months so far, but 6.57% return so far in April is stunning. Let's have a quick look. Yeah, drawdown doesn't look too crazy. Like there's nothing that looks like martingale or anything like that where you're seeing massive drops in one day. So yeah, nothing too much to say on any of these metrics because, like, your Sorrentino, your Sharp, your annualized drawdowns, there's not too much to comment on until we start to see, after a whole year. But everything's looking pretty high at the moment, as it would be with the returns that you're producing. In terms of trading, we are Forex, indices, commodities, and stocks, ETFs, and CFDs. Okay, interesting. In terms of assets, let's have a quick look. So yeah, it looks pretty spread out again. So pound dollar, pound Aussie, euro Aussie, euro dollar, Aussie dollar, New Zealand CAD, pound CAD, Aussie New Zealand, Aussie yen, dollar Swiss, CAD Swiss. Okay, so interesting. Quite a decent mix. I would presume that you're swing or mean reverting trading if I was to take a guess, just by some of the assets that you're trading, which is not a problem. Like, New Zealand CAD so far, 11 trades, 72% win rate, 5.56% return. Great. Yeah, it's pretty good split in terms of American, European, and Asian. Also, Asian being your biggest loser, but again, there's not enough data for me to say, okay, sorry, 2 seconds, screens are away, turn off. There's still nowhere near enough data to say, okay, maybe you need to look at Asia session, look at the back tests, look at the historical data of your strategy. I mean, it's something that you can look at, and if it matches up, then you can obviously segregate your trading into sessions, which is not a bad thing. But yeah, there's not enough data for me to say, yeah, skip this. Again, with days of the week, there'll be nowhere near enough data for me to say, okay, look at Tuesday, Wednesday, Thursday. Like as much as you might have quite a few trades, just don't have enough historical data on this point. But again, it's good to see that you're trading sort of every day. Nothing wrong with that. Let's look at the strategy analysis. So long exposure quite high, winning percentage. That's not too bad. A little bit lower, profit factor high, average win good. Average win is bigger than the losers, and you're holding your winners a lot longer than your losers as well. So this is always a good thing to see as well. Again, as I said, there's no right way wrong to do it. I normally ignore this, but again, what it is showing is you want to cut your losers short and you want to hold your winners longer. So nothing wrong with that as such. Let's have a look at the VAR. Yeah, again, VAR very stable. You're holding your risk management pretty well. Like right now, you're at the upper end of that, but again, there's nothing to be too worried about. So yeah, no problems with this. Let's see if there's any correlation with anyone interested. Yeah, so nothing really too crazy in correlation either. So yeah, everything's looking good so far. Keep doing what you're doing. And again, I'll do the exact same thing as what I said literally earlier is, come back at the end of the year. Let's do a Darwin review at the end of the year. Let's see how RDQI is doing. Oh, Kieran's out of the studio. There he is.
Oh, I'm a little bit late, but here we are.
What was the text? I'll be 5 minutes at 10:02.
Sorry guys. I got caught up on a call with a client. But I do apologize.
Yeah, no, we're just going over 2 Darwins. Apart from that, just been waffling.
Is this not? Are we not live on Twitter?
I did post it.
I know it says we're live on the top, but then under live viewers it says there's no one from Twitter. It's weird.
To be fair, see the past 2 sessions we've not had as big numbers. Maybe it's not posting to X.
Yeah, it's weird that is. Because if you hover over live viewers, it just shows the YouTube channels.
I've not even looked at that, to be fair.
We're live on Twitter. It's weird.
Yeah, for me it says like there's more viewers than X.
Oh, it does. Oh, maybe it's because I rocked up late. How you doing, Shabazz? Hope you're all good.
But yeah, to be fair, I was just going over people to say basically watch yesterday's live stream for information on capacity. We're going over just some basic things like that. again, and then just reviewed 2 Darwins. Not too much people willing to put in a Darwin, so maybe Kieran's here. Maybe someone will be willing a bit more.
Maybe someone wants a Brummie accent. Maybe that's what it was.
Yeah, maybe they're like, geez, this voice. There's no subtitles.
There's an interesting development since yesterday's capacity session, and that I think my capacity now on XAQP is at 7%. Yesterday it was at almost 10%. So bit by bit, after adding the order splitting in, it's like very noticeable difference now from a capacity perspective that actually my flow is, the toxicity flow, the toxicity of my order flow, let's say, is far, far lower just from me splitting my orders and removing the dodgy strategies that I had that were entering in illiquid times. So it's been fun to watch, because now I think my AUM is almost at 2 million. And if that's 7%, I mean, my maths is shocking, but that means a 20+ million capacity. And that's actually higher than my hypothetical capacity, which is interesting. I also exited UJ longs at 4 p.m. and this past hourly candle has just absolutely caked it.
Oh, thanks for telling me.
I think do you know what it is? I don't think I'd amended the strategy for daylight savings times. And so it exited two of my trades, so I just exited the third one.
Well,
can we test multiple strategies on FX Dreamer at once, like strategy quant? Well, you can't really test strategies on FX Dreamer. That's where you build them. So you could build multiple strategies within the one file, but you would need Blaine's probably better to answer that question, to be honest, so I'm going to let him.
Yeah, I mean, you could test multiple strategies within the one file, but you would need to then extract it to put comments in how to describe. You can when you place a trade, you can get it to sort of put a comment after it. Like there was magic numbers attached to every strategy, but you can ask it to put a comment. But then you would need to upload that HTML file to something like my FX book and filter by comment or magic number. But the magic number is attached to the strategy, so it will just be one magic number for the full thing. So you would need to attach a comment or grouping to the strategies within FX Dreamer in order to do that. It is possible, but again, it's probably just not worth it for timing wise. If you're wanting to build multiple strategies at once, strategy quant, brilliant for that. Or you just download multiple terminals for MetaTrader, but then again, you'll be completely down to processing power of your computer because you'll need to attach, say, 2 cores to each one. You're probably going to still do it in the same time frame as that. The only other way is obviously using VPSs. Again, that's probably the only way. Be interesting though if someone could make a feature that you could test multiple strategies at once in MetaTrader. I don't know how it would work because I think that would come down to MetaTrader rather than the actual FX Dreamer.
Did Martin mention that? I'm sure Martin mentioned.
No, he was on about testing multiple, the same strategy of multiple assets. Yeah.
Got you. Yeah, because even that, I'm not really sure how to do, but it's one of those problems that I've never thought was a problem. I've just tested them all separately. I guess the only time that would be really important is if you was the strategy itself was let's say you was trading a mean reversion system on euro dollar and pound dollar, the entries are virtually going to be the same depending on settings. So you could make it, if you run them separately, they're both going to execute, whereas if you put them into the same code or the same file, only one would execute. That's where I feel like that would be useful, but for me it's never really been too much of an issue.
I mean, you would do multi asset just to kind of cross-validate the actual underlying strategy to be sort of, you use that as a robustness metric if you want to test it on different assets. I think it's good. How do I describe? For me though, I'm not too bothered about that. Like you'll know as well, Kieran, like some strategies are just perfect for certain markets. I don't really need validation from another market. The way that I validate it is if I change so many settings, is it still profitable? And if it's still profitable, I just say, right, let's look at this. Like this is working great. Yeah, I mean, everyone has their own ways to go about it at the end of the day. You know, the more markets it works on, excellent. Like that is obviously a cherry on the top for me. But it's not like a criteria per se, because we know that like some markets will be more volatile than others. So naturally, breakouts are going to be a bit more better in terms of you're getting more risk to reward on them than something like, you know, euro dollar that doesn't move as much as, you know, gold or, you know, things like that. So yeah.
I don't personally subscribe to it has to work on every asset either, because there's so much variance between different assets, like and the different times of day that you trade them. But I don't subscribe to that absolute fact. It's only robust if it works on every asset. It's like it ticks another box, but it's not needed. As you know, Blaine, when me and Blaine test strategies, every single one of them works on dollar yen, period. You know, I mean, you can't get every single one to work on GU at the same time.
Yeah, exactly. Like you wouldn't wear golf shoes to play football, even though you're on the same amount of grass. You know.
I like that one. I'll keep that in the locker.
That's the way that I view it. They're both purpose for grass, completely different sports. You know.
Yeah.
They're both shoes. So that's the way I view it.
The whole notion is you're building something to trade a specific market, and markets are so dynamic that you have to adapt each one to trade a specific. For me, if the general idea works on two markets, great. It's very rare that it's going to have the same settings. Like, I mean, if you're trading GBP, JPY, compare that to euro dollar. You know, let's say you're using a fixed pip stop. It's never going to be the same settings, because the G-ray stop is like, what, 100 pips, maybe 50 pips, like, whereas a euro dollar might be 20 or 30. So yeah, I don't subscribe to they have to.
I think cross-validation would be good if you're trading a gold strategy and it works on silver. Do you know what I mean? Like similar markets, things like that. Yeah. You know, if you've got an S&P strategy, does it work on the Dow? You know, that's probably a decent cross-validation because they're very similar. Like, you know, they're as close to assets as possible, just, you know, different sort of stocks within it. But in terms of, I think currencies, FX is just too spread out, as in like each country's got their own, you know, there's just too much going on with currencies that I don't think you can, for me personally, I'm not using different markets to cross-validate it.
Mm-hmm. I think there's an interesting strategy there we could build, potentially for the charity Darwin. If NASDAQ and S&P have broken X highs, but the Dow hasn't, you could trade the Dow pre-breakout.
Mm-hmm. Yeah.
I wonder. I don't know how to do that to reference other assets, especially not with FX Dreamer. I'm sure it can be done. I'll probably recruit my handy friend Claude, but
no. What you do is you just make sure that see with an FX Dreamer how you can attach current market.
Yeah.
Attach the current market to the buy button of the market you want to buy on, but run the open program on the chart that you want to run it on, if that makes sense. Yeah. So we'll run the EA on the NASDAQ, but the execution will happen on the Dow, if that makes sense.
Makes sense completely. Yeah.
Yeah. Kindly give update on charity Darwin. It's a little down.
Yeah, you don't listen to the charity Darwin. It's blown. We've blown it.
Yeah, that's a little down. I'm working on to get like a few more decent strategies on it. Like it doesn't trade enough at the moment, and some of the things has just been a bit. It's been okay. You know, one of the strategies.
At the worst time, didn't we? Like,
yeah,
people have just been tough, man.
Yeah,
and fair.
Yeah, it's what it is. It's just part of trading. Kieran, I was actually saying, like, you know, the index is a reflection of the community as well at the same time, and the index is not having its best year so far. But that's just trading. Like we go through down periods or we go through flat periods. The whole point about it is not to kind of blow up, to sort of preserve your capital. So then we are still, we're not down 30% and then we come into a good period that it's a break-even year. We're not losing too much in the times where there's turbulent. Then when the conditions are right, we've still not lost much, and then we can actually earn positive for the year. I think that's it's definitely why.
Two things in that though is, number one, they fixed, since yesterday's session, they fixed the investors tab on the index. Now shows so there's 47 million current investment into the index, which is I'm super happy that now shows, because it actually accurately reflects how much AUM we have in the index. But also, if you look at 2025 returns, right? Because I remember this time last year, we delayed the launch of the index publicly because it went through a bit of a crappy Feb, and so we pushed it back to I think June. But about this time last year, the index was also looking the same. It was also looking really, really weak to have started the year, and then look at the performance at the back end of the year. It was fun, and then ended as the best year since when 2021. So you can't write off. People might have been struggling over the past couple of months, but equally they did last year. Look at last year. January was a worse month than January this year. Feb was pretty much the same, big down month on both years. And then March and April have kind of swapped places. So we could still end this year, from the index perspective, up at 27%. Obviously not financial advice, of course. But that's what happened last year. And so,
2020, we missed the whole first quarter and part of the second quarter, and it still finished 20% year. It's showing that it's there's maybe a little bit more strength in the back end than the front end at the moment. Even if you look, so 2023, we were only up just a little over 3%, so nothing crazy up. But again, that year finished 16%. So from May to there, it was still 13% gain. So this is a good representation of showing there is times where we go through the markets and get no return, even a full quarter. Even looking at 2024, there's a tough period. June, July, August, September would have been down. So that'd have been 1, 2, 3, 4, 5 months before we make new all-time highs. So yeah.
Oh, UJ's tanking, bro. Are you long, Blaine? Sorry.
A little bit, yeah.
I was also long. A little bit.
Yeah, it's not that much.
I always feel like I'm the bearer of bad news. I always say to Blaine, we'll be sat on calls and I'll be like, UJ's moving. And he's like, now I've got to check.
I don't check ever, really. Yeah, I'll be down. It's not that bad. I'm down like £3.
That's not too bad.
Nothing. Can't get my Tesco's meal deal with it, I'm afraid. So. Yeah, I've still got another hour and 10 minutes of being in this position though, so could get sketchy.
Yeah, I should still be in it as well, but just by sheer dumb luck, I forgot to update the times for the end of day close. I have this thing recently where I'll close trades and I call the tops and bottoms, and Blaine refers to me as the magic man. Or I wish he did anyway.
The wizard.
The wizard. Just because every time I come out of a trade, it seems to tank.
Somehow, so far. I'm hoping it changes over the years.
It'll come to bite me soon.
I'm hoping it's like you go out a trade, I'm still in it, and it goes up like 4% in a day. I'm like, finally. The rules have changed. And I've done nothing.
Oh,
that is what it is. Everyone has their own ways. I don't think they're, if it's working.
I'm slowly coming to the acceptance of part of XAQP's edge is in me closing trades. It's in me getting involved and being a little bit skippy. I usually, just FYI, I don't close random trades. I usually close trades when price is past ATR, and then I've just taken a breakout trade, and I'm like, I'm not a fan of breaking out of or trading the breakout of ATR. Yeah, I sound a bit reckless, don't I?
maybe I could build a whole test in like some of the strategies, like how much extra percentage over the years does it go past the ATR, and is it consistent or is it just luck years? That'd be quite interesting to find out a statistic on that.
I used to do a lot of my manual trading was based around ATR, but I would be looking for mean reversion plays, which is why naturally now if I'm taking a breakout and it's at ATR, unless it's on gold, like gold I'm a little bit less bothered about, but if it's on like euro dollar, I know euro dollar ain't blasting past ATR, no chance.
Yeah, that's true.
I just realised my face is covered by those comments as well. I thought hidden in the background.
Where was it?
ERQ, the king.
I went over that today as well, just because the whole point of it, when I was speaking about capacity, is like, you can think you're fine, and then just look how quickly the investment came in for ERQ. So, like, if
That's
you
scary. His life has changed, man. Rob, random question: monthly payouts, is it part of monthly price still, or just upfront? It's both. I think there's an upfront cost, and then there's a monthly fee on top, every month. I've never been too bothered about monthly payouts, to be honest. I think when you get to investors anyway, there's less worry about monthly payouts. But I understand a lot of people prefer it. Like I do get it. But.
Yeah, no, I get it as well. Like for the Darwinia, when you're starting out, yeah, it can make sense. But the way that I view it is, if you see it's a long term, you're just giving back money that could have been yours, if that makes sense, because it's a little bit extra cost. Does that make sense?
Yeah.
But yeah, when you get to investor capital, then payday becomes almost every day eventually.
Yeah.
Not every day.
Mine's every couple of days at the minute, but I'm getting like 12 euros every couple of days.
Yeah. So they were quite funny. Like, what was it? I got 63p the other day when I was like, "Jeez, was I that bad since that person bought in?"
I think I get it's about 850 euros. I think on Monday. That's from my first big investor that got involved. And then my index payments are next month, which at the minute are like 2,500 each, I think, which will be a nice one. But the rest of them are all like 18 euros, 20 euros. Adds up. Yeah, it all adds up, mate. It all adds up. When you're getting that a day, yeah, it's pays for your Tesco meal deals, doesn't it?
A few.
Mind you, you probably don't have a Tesco around by you.
Yeah, it's 10 minutes away.
10 minutes. I've got 2 Tesco's within 2 minutes of either direction.
We've got a village shop.
Yeah, end of the year, maybe I'll be getting investor cap again. Yeah, of course you will, Rob. Of course you will. You just got to stay. In fact, I haven't checked your Darwins in a while. I can't even remember what your newer Darwin was. Oh, SPWL's had a good day today, up 1.55%.
Sorry, Rob, we're going to expose you. Need to see it. 1.55, damn. It's not one to load. You've joined the stream and just killed my connection.
I'm just a walking curse when it comes to Wi-Fi.
Oh, there we go. Is it? Yeah.
Yeah.
Damn, I mean, 1.55% for April as well, up 22.74%. Jeez.
Rob threw everything in the kitchen sink at that oil trade. You got to rate it though. You got to rate it.
Yeah, but I mean, look, new all-time highs as well this month just from trading. So it'd be interesting to see what.
Is it? It doesn't look like his all-time high quotes updated on his thingy. I mean, it clearly is, but no, maybe it's probably the equity on on the big day.
Yeah,
It probably rallied higher, but then closed where it shows on the chart.
yeah. I thought it showed all-time highs in terms of equity though, like this chart.
It does, but that doesn't show your equity. The chart you're on now. For example, if he lost 2% today, that where the curve has spiked now on today's part, that would now go down.
Mm.
Does that make sense?
Yeah, no, I always thought that this was just equity because, like, on my whenever I reflect it to my own like FX Blue, like it always seems a little higher in terms of the close, but interesting. Maybe it's just because the way that the VAR obviously works compared to my real account anyway. So yeah.
Okay. Rob says my VAR and excursions. I've got to see Kieran's reaction. Load them up, Blaine.
Oh yeah.
Oh my days. I mean, at least the downside excursion wasn't too bad. Oh Lord. Go on,
Looks like
show
the man's built skyscrapers in a village.
Just say it looks like New York, doesn't it?
Yeah.
Oh my life. To be fair, that's been slowly stepping up consistently. Oh, Rob.
It's like an
That's killed me.
Ichimoku cloud, doesn't it? I mean, Kieran, you'd probably trade this.
I probably would. I probably did trade it.
Yeah, maybe. Rotation. Yeah. I mean, fair play. I think that's got to be the biggest ones we'll ever see.
Have you ever seen a martingale's excursions?
Nah.
It's one of the worst. Like it's the same, but it's to the red side. So it's like massive red candles.
Wait to see this guy's Darwin, right? This guy doesn't trade for like 9 months at a time, then has one trade.
Oh my God. I mean,
It's fucking
can't say that word.
But look, I'd like two trades. That doesn't trade for like heaps.
That's why he's not got any investor capital in it. Because I wonder what his load him on Darwinex Blaine. I want to see his experience metric. Yeah, Rob, I'm yawning. Don't worry, I'm not yawning at you. I'm just absolutely battered.
92.5% win rate though.
Yeah, I'm surprised he's taken 4 trades.
Oh, that's not what I wanted.
Rapalas, this looks scary. Yeah, done off.
How do we check it? Slash.
You've got to be logged into Darwinex.
Oh, do you? I didn't think you did. Oh wait, no, I know how to do it. Watch this. Why am I in capitals? Oh, what was it, Darwin again?
EKL or something?
Nah, wasn't it that? Right, someone tell Rob, what was that Darwin? Or do you have the Darwinex 0 open here and just check who's top of Darwin?
I'll find it. Where was it? Oh,
The first place in DarwinIA Gold.
in gold. I'll have a look.
Yeah.
ELW.
Yeah, experience 2.1.
Yeah. So click on it. You'll see how long his D periods are. So does that say? I can't see.
2.53 total D period. Average days 922. 392.
Yeah, 392. So every 392s he ticks a new D period. So yeah, that's not great from an experience perspective. But your experience or your D periods is measured based on frequency plus time. I don't know the exact calculation off the top of my head, but it takes into account how many trades you take over a specific period of time. It takes the average, and then each time you fulfill those requirements, it adds another D period. So I think like mine's 10, yours is 10, Blaine. Anybody who trades for a long enough time and is active enough, you will get to 10. Yeah, mine's 10. My average D periods is 19 days. So every 19 days, I create a new D period.
Interesting. I wonder what mine is.
It's not like a major thing. It's not super important, I wouldn't say. It's just there's less confidence the lower your experience score is.
Yeah.
Oh,
Risk stability. All right, yeah, that's fine. I think my capacity's gone up slightly. I've done nothing.
Check your actual flow. Go into your investors tab. That's strange. Your average slippage is quite high. See, look, you're actually
I'm at 30 now.
Need to get split in those orders, Sunshine.
It's because
that average slippage is so low.
Yeah. The problem is it's split into two positions. So that's two positions at -6 pips. Both.
Yeah. Oh, I'm long Nasdaq apparently.
Where are you getting out?
Why are you looking to fade me?
No. Joke.
There we go. My free orders have triggered. I don't even know what strategy this is. So look. You get that many in it, you don't even know where to look. It's just a simple breakout. I think this is the one that we did some work together on, Blaine.
Oh yeah, that was just for session, wasn't it?
Yeah. No. This was one that we did together. I asked for your help or something. Do you remember? What was it? I can't remember what it was. Something wasn't working for me, and you helped me out.
I can't wait. I can't remember. We're slightly down again. They know, great. How have you managed to call that top again, eh?
Just pure dumb luck, bro. But I'm going to give it all back on Nasdaq now anyway, so happy days.
Release a course on tops and bottoms.
Hey. I don't even know if this strategy closes once per day. We might have added that in.
I don't know. You tell me. Can't mind.
I'm locked out of FX Dreamer as well because I can't remember my password. I changed it like the other day. Invalid login credentials. It doesn't help me. What did I change it to? What did I change it to? I have no idea. I'm gonna have to change it again.
It's gonna have to be a reset.
Actually, I'll just use Claude. I'll just ask Claude. Rapalas, mine says average days per D period 26. Is it too low? Nah, that's higher than mine. Mine's 19. Add files. XAQP. Strategy code. Nasdaq. Breakout. Yeah, I can't remember if it closes on the same day. I don't think it does, but we'll see. Probably end up giving all my small gains back today.
The only reason you don't know is because you exit before any of your systems do.
True. I see a bit of blue and I'm like, ding, 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 done for the day. Yeah, Kieran by safe, keep your password in there. Yeah, I actually need to do that. I'm really bad with passwords. Really bad.
That's something easy done though. Like when I changed new phones, that was me. That was my old Instagram locked out, and it kept on saying every time I tried to show my face, said that's not you, and I was like, oh man.
I can tell you, it absolutely is me. I transferred my phone before and forgot to back up my Google Authenticator, and it blocked me out of everything that I'd ever done Authenticator for. Yeah, there was only one thing that let me reset my Authenticator, so that was a bit of a painful time. So now I always keep a backup of it somewhere.
Yeah. No, passwords are absolutely. Well, no, I've had some bad ones.
Some bad passwords.
See when you get given like a recovery API key or something like that, and you lose it. Oh man.
Oh no, I always keep them safe.
Oh man, that was a long phone call. Let's put it that way.
It's me. I'm Blaine.
Prove it. I was like, right, okay. I said to copy your passport. I was like, oh, that's not worth it. I bet that someone's way to do identity fraud in me.
Oh god, funny stuff. Anyway, guys, I think maybe it's time to call it an end to the session here, because me and Blaine are just rambling on about nonsense. I once again apologise for being 30 minutes late. I couldn't live without password manager. Yeah, I think I need to set something up, to be fair. I actually need to reset my FX Dreamer password because I can't remember what it is. I literally reset it 2 days ago and I can't remember what I reset it to. Anyway, I'm rambling. Yeah, appreciate all you guys for joining this session, for allowing Blaine to analyze your guys' Darwins. Thank you everybody for putting comments in the chat box. We appreciate you always. I'm going to have to do some diagnosis to see why these sessions aren't going out the way that they have been recently, because it's doing my head in a little bit. But guys, I wish you all a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. We will see you next week on Tuesday for a strategy development session. Peace out, guys. Have a fantastic rest of your week and weekend. We will keep doing these sessions, Shabazz. Don't you worry.